Hello everybody, it's Aisha and welcome back to my channel. So if you've been following me for a while, you know it's been a whole year since I bought one of my first rental properties, and actually I'm in the process of refinancing that property right now. It just got me reflecting a lot on what was happening back then, and it's just crazy how different the world is from even just a year ago. I know it feels like there's a lot of uncertainty and bad happening in the world, but I definitely wanted to make the next couple of videos that I'm putting out just surrounded by positivity and some ways you can take advantage of the situation we are living in currently. And I know everyone's reality and situation that they're living through day to day is different. However, I really want to take the time to focus on, positive subjects as much as possible and try to find ways and resources to help you guys navigate some of this uncertainty that we're living through. So on that note, a nice positive is that the housing market is still relatively strong. We haven't seen really much of an impact by the pandemic on the housing market. For example, mortgage rates are super low, probably the lowest that they've been in a very, very long time, and even lower than the rate that I bought my house at. And I thought that rate was extremely low. So it's great to be able to take advantage of whatever you can during this economic climate. And I know it's hard to say what will happen for the next few months, but I'm doing my part just to take advantage of everything that I can now to set myself up for success in the future. So for this video today, I'm going to talk about why I'm taking advantage of refinancing my home after only owning it for 1 year and how this is going to set me up for success in the long term. And I know a lot of you asked me to walk through the exact numbers on a lot of the properties that I'm working on. So for this one, I'll break down financially why this refinance makes a lot of sense for me. Before we start the video, if you do find this video helpful, I would love if you could like the video and also subscribe to my channel where I put out content regarding rental properties and all aspects of real estate for beginners. So on that note, let's jump right into it. On the surface, refinancing makes sense. The whole point of a refinance is to save you money in the long term. When you're refinancing, you're taking your current mortgage, which is set at a certain interest rate. In my case, it was 4%, and you're refinancing it through, a current lender or a different lender, essentially to get a new mortgage with a new lower interest rate. So the whole purpose of refinancing your mortgage is to save you money in the long term. You want to refinance your old mortgage, which has a set certain interest rate, and you want to refinance it for a lower interest rate in the hopes that that will save you money on your payments in the long term. However, there are many layers to refinancing, so you want to make sure you're not in a position where you actually end up spending more money in the long term. So I'll provide examples of how to avoid those situations. You do want to be careful of just trusting blindly what a lender may tell you, because there are a lot of hidden costs that come with a refinance. Not necessarily they're hiding it from you, but there are things that they're not going to actively share with you, and you want to make sure that you're reading your loan terms very, very carefully to see how much money you're actually paying to refinance so that you don't end up spending more money than you're actually saving. So first, let's walk through exactly why I made the decision to refinance my property after only 1 year. Okay, for starters, I really wasn't planning on refinancing my property super early. However, the lender that I work with, they have a pretty good customer service model. So they actually actively reached out to me when there were lower interest rates available so that I would be able to refinance my property. So my original mortgage, my interest rate is 4%, which I think is pretty good. And I feel like that is an interest rate that's really low just based on historical averages. So I was really excited to lock that in. But my lender called me and told me that they'd be able to provide me a new interest rate of 3.3%. I did a lot of due diligence and I asked a lot of questions before I even started the process to make sure I wasn't wasting my time. My first question is, why are you providing me with a lower interest rate knowing that you're gonna make less money off of me in the long term? And their answer actually made a lot of sense. They would rather them refinance me, and yes, they may, lose a few thousand in interest over the years than to lose me and lose my whole account to a different lender who offers me a low rate. The program that they were offering me was essentially like a customer loyalty program, which means I really didn't have to jump through all the typical hoops that someone refinancing a mortgage may have to jump through. For example, on top of offering me a new interest rate of 3.3%, they also were going to cover almost all of my closing costs. They weren't going to do income verification, and they didn't require a credit check. They had me as a customer in good standing, and they didn't feel the need to, re-verify all my information, as they wanted to make the process quick and simple. And like I said, they offered to cover almost all of my closing costs except for one cost, which they said legally they weren't able to reimburse me for. So that was the one cost that I would have to cover. And that is a $2,000, closing cost. And that would be stretched over my entire mortgage for 30 years. Another nice thing is that they offer me options when it came to my mortgage terms. A mortgage is typically 30 years, which is what I had, but since I'm a year into my mortgage, I had 29 years left. So instead of just offering me the option to refinance and start over and have a new 30-year mortgage, they offer to pick up at that 29 years. I picked the 29-year option because it'd be easy for me to compare my current mortgage to my potential new mortgage and allow me to run the numbers easier. And again, I didn't want to extend my loan term as that kind of defeats the purpose. So I wanted to really stick with that 29 years, and I'll walk through exactly why this program made sense for me. So first I looked at my old terms and I saw what my full payoff amount would be at the end of 30 years. What's crazy about mortgages is that since they're over such a long amount of time and since you're usually financing a huge chunk of money, the finance charges, which is essentially the interest alone that you pay on your loan, ends up being very, very hefty amount over 30 years. So for my original mortgage, I looked at when I paid off in 30 years at my fixed rate of 4%, I would have paid $208,000 just in finance charges. Again, which has nothing to do with the money that's going into my property. That is just interest. So then I looked at my new loan terms and seeing how much I would pay in finance charges over the course of the remaining 29 years that they were offering me the new mortgage for. That amount was around $170,000. Again, one was a 30-year and one is looking at 29 years. So what I did to look at my $170,000, I wanted to add in the interest that I've already paid to see the total amount that I will pay. I've paid about $8,000 in interest over the course of my mortgage so far. So I added that to the $170,000 that I will pay on my new mortgage, and the total comes out to $178,000 in interest charges. So if you subtract that from the $208,000 that I would potentially paid, I am going to save about $30,000 over the course of my loan in interest. Being early into my mortgage is actually an advantage here. When you're early into your mortgage, the majority of your monthly payment is actually going toward interest. Over the course of the years, as you get closer to paying off your property, you have less, principal to pay down, which means that there's less interest accruing each month. So more and more money goes towards your principal. So it actually makes sense if you're going to do a refinance to do it relatively early into your mortgage, because that helps you save a large amount of interest over the course of the remaining mortgage. Okay, so those finance charges, again, I'd be saving $30,000 over the course of the loan. But this is only as impactful if you're actually going to be holding that property for 30 years. I really don't plan on holding this rental property for that long. I do want to commit to it for some years, but I really don't think I'll be holding it for 30. So I wanted to make sure that it made sense for when I plan to sell my property, that I'll still be recouping the money that I'm putting into it. So that being said, I wanted to see when I would break even on the additional $2,000 in closing costs that I'd be responsible for my refinance. So to do this, I looked at my currently monthly payment with just mortgage and interest, and I compared it to what my new monthly payment with mortgage and interest would be. So for me, my savings would be about $65 per month. To make up for the additional $2,000 in closing costs that I would have to cover, I would break even in about 31 months. So that means after 2 years and 7 months, I will break even on the additional costs that I put in for my refinance. The reason that this ended up making sense for me and I decided to move forward is that I do plan on holding my property for at least another 5 to 10 years. So after 2 years and 7 months, I would actually be making more profit than if I would have kept my old mortgage terms. And while $65 a month in extra savings really doesn't seem like a lot, that ends up being $780 per year. So as a rental property investor, I think it's super, super crucial to be as frugal as possible. So when you find opportunities to save money, you shouldn't, scoff at, $65 per month, because it does end up being a lot in the long term. That $780 can be used to pad, emergency savings. That can be used for additional maintenance and repair on the property, or I can use that and invest it into other investments that I may have. And like I said, I plan to hold my property for at least another 5 years. So over the course of just those 5 years, I'll have saved an additional $4,000 just from refinancing. So this is why the refinance that I'm going through definitely makes sense for my financial portfolio. So just to recap what we talked about in shorter, simpler terms, is that refinancing in a lot of situations can save you money in the long term. However, it's very important to run the numbers for yourself to make sure that you will actually come out ahead in savings. Another thing is that the program that my lenders offered me in terms of covering most of my closing costs and not having to verify my income, or do another preliminary credit check actually was a benefit to me. So make sure that when you're shopping around for lenders to refinance your property, that you negotiate as much as possible. See what type of programs and specials that they have on top of just reducing your interest rate. A lot of lenders, if you negotiate with them and ask for additional benefits, will find ways to cover some of your closing costs for you. Getting some of those additional closing costs covered will drastically reduce the time that it takes for you to recoup the costs that you put into your refinance. You want to make sure that you're breaking even as soon as possible so that you start profiting from your refinance. And remember, look at the loan term specifically. Yes, you may have a lower monthly payment over the course of your mortgage, but if you were already 10 years into the mortgage and your lender is offering you only a 30-year mortgage, you're essentially restarting and you may actually end up paying more interest in the long term. So make sure you are doing comparisons based on whatever your mortgage is. Interest rates in today's economic climate are very, very low. So if you have the opportunity to refinance, I definitely suggest looking into it. If you have a success story with refinancing rental property or just helping you, pay off your house a lot quicker than you would have on your original terms, I would love to hear in the comments below. And if you have any questions at all of what I covered today, because I know today's topic was super numbers heavy, please leave a comment below and I'll get back to you as soon as I can. As always, thanks for watching, guys, and I'll talk to you soon. And with that, Aisha out.